All right, welcome to the end of the day huddle for August 10, 2026. You guys already know the drill by now. We're skipping the fluff, turning down the mainstream noise, and cutting straight to the pure signal driving today's market action. Let's get right into it.
So looking at the tape today, on the surface, you might just glance at the domestic action and think, just another quiet, range-bound Monday. But seriously, don't let that flatline fool you, because right underneath this calm exterior, we've got a staggering 50% U.S. tariff and some absolutely massive block deal whispers just boiling the water. These are the major undercurrents setting up tomorrow's volatility, and we're going to map them all out for you right now.
Just look at these headline numbers. The Nifty 50 closed today at 24,584, up just a tiny fraction of a percent. And the Sensex basically echoed that exact same sentiment, settling at 78,542. The market effectively eked out these marginal gains, basically whistling past the graveyard and completely ignoring the massive macroeconomic elephant in the room that we're about to dissect.
And here is that very elephant. Washington's tariff on Indian goods now stands at a massive 50%. Now pay attention to how that number is actually built. It's a 25% reciprocal duty slapped together with a 25% penalty specifically tied to India's Russian oil purchases. I mean, this is among the highest on any U.S. trade partner right now, and it's undoubtedly the single biggest India-specific risk on the board today. Export-heavy sectors, think textiles, gems and jewelry, leather, auto components, they are completely exposed here. Now, for today, the tape absorbed it without panic, but make no mistake, any headline showing an escalation or even a de-escalation of this tariff is going to be your primary swing factor moving forward.
So you might be wondering, why didn't the market crater today? Well, the answer lies in our global stabilizers. We had a highly constructive backdrop that really allowed India to absorb those tariff fears. First up, the RBI's Monetary Policy Committee played it cautious but supportive. They held the repo rate steady at 5.25% with a neutral stance. Meanwhile, over in the U.S., Wall Street closed at record highs on Friday because a soft July jobs report basically took near-term Fed hikes completely off the table. Add in Brent crude hovering relatively firm, right between $82 and $85 a barrel thanks to West Asia tensions, and you've got a macroeconomic environment acting as a pretty solid shock absorber.
All right, let's shift gears and look at the movers to see how all this builds into individual trading setups. Because while the main indices barely blinked today, individual futures and options counters were absolutely tearing up the tape. Just look at the massive divergence we have here. You've got near double-digit surges happening on one side and absolutely brutal heavy sell-offs on the other.
Starting with the absolute roar of Hitachi Energy India, or as we all know it on the ticker, Power India. This was today's top F&O gainer, closing up a massive 10.6%. The power equipment and grid transmission and distribution bid came roaring back today. This whole move was driven by a really powerful narrative around their order pipeline and the broader CapEx cycle, which led to this sharp single-session surge on rising volume. But hey, a quick word of caution for those of you looking at the chart right now, this name is highly extended after today's pop. If you're already in it, the play is to ride it only with a strict trailing stop.
But as we know, for every action, there's an equal and opposite reaction, and this perfectly illustrates the rotation we saw today. While power equipment surged, the PSU power financiers just got hammered. Power Finance Corp dropped 8.3%, making it the top F&O loser, and REC followed right behind it, down 6.3%. What we're seeing here is just brutal, aggressive profit booking after their previously strong runs. When you combine that heavy supply with their inherent rate sensitivity, the damage was pretty swift. You're going to want to watch this carefully tomorrow to see if a stock-specific trigger emerges to halt the slide, or if this turns into pure, continued sector rotation.
Okay, let's step into the scuttlebutt. These are the unverified whispers and block deal chatter that are actually moving the institutional needle today. Step 1. PAYTM. The stock was up 9.9% today on its profitability turnaround story, but there is heavy chatter right now that SoftBank Partners is lining up a 2.3% stake sale. That's about 2,000 crore rupees via block deals. Private equity exit blocks usually hit the mark on direction, so the probability here is medium to high. If it's true, expect a negative 2% to 5% supply overhang on execution day. Step 2. Misho. Elevation Capital and Peak XV Partners are rumored to be selling a 2.3% block, roughly 1,900 crores. Again, early investor trimming post-listing is super common, so watch for 3% to 6% risk around that block. And finally, Step 3, SBI Cards. There's this recurring medium probability fear resurfacing that the RBI's proposed NBFC revolving credit curbs will be applied to credit card revolvers. If that regulatory anxiety actually materializes, it strikes right at the core model and could mean a 5% to 10% hit on card issuers.
Now, speaking of things you absolutely cannot ignore, take a look at this massive wall of text. Q1 earnings season is finally tailing off, and the sheer volume of these stragglers reporting over the last few days has been pretty staggering. Honestly, it's enough to make your eyes glaze over when you're staring at the terminal. But we don't do noise here, we do signal. So let's just clear the board for a second and focus on the one absolute standout from this massive list.
1,777. That number right there is Titan's consolidated profit after tax in crores for Q1. This is a massive 63% year-over-year jump. Now, it is totally vital to note that this brilliant print was heavily aided by a 407 crore customs duty gain, alongside revenues that jumped 29% to over 21,356 crores. When you're sifting through the tail end of an earnings season, it's these kinds of exceptional prints that really command institutional attention.
So how do we actually set up for tomorrow? Well, this brings us to the options tape to mentally anchor our trading expectations. Nifty Max Pain is sitting perfectly at 24,600. You've got your highest call open interest acting as resistance at that exact 24,600 level, and the highest put open interest offering support just below it at 24,500. Meanwhile, Bank Nifty Max Pain is completely pinned at 58,000, with both the highest call and put open interest anchored exactly on that 58,000 strike. These are the hard battle lines drawn by the institutional writers for the upcoming sessions.
And those battle lines bring us directly to tomorrow's catalysts. First up, do not forget the new rule. The weekly Nifty options expiry is Tuesday, August 11th. Expiry is now the last and every Tuesday under the current NSE rule, not Thursday. Keep that in mind. Second, keep an eye on the earnings stragglers hitting the tape tomorrow, specifically NMDC and SAIL. And finally, we've got an actionable idea in focus, Hindalco, as a long setup. It closed up 3.2% today on firm aluminum LME prices and a really fresh Q1 print. The catalyst here is clear metals leadership combined with strong Novalis spreads. The risk? A sudden rollover in China demand or LME prices, so just make sure you're sizing your position appropriately to the metal state.
So I really have to ask you, why endure endless scrolling on social media or sit through hours of boring financial news channels when you can just get the pure, concentrated signal right here? If you value your time and your capital, do yourself a massive favor. Skip the financial fluff. Subscribe to this explainer right now and hit the bell icon so you never miss our daily zero-noise market intel. We literally do the heavy lifting so you don't have to.
Before you head out, a super quick reminder. This explainer is strictly my personal research for educational purposes only. Always verify X dates and record dates on your own, and please do your own homework before placing a trade. The tape is set and the catalysts are fully loaded for tomorrow. So the only question left is, are you going to be caught off guard by the noise, or are you ready to trade the signal? See you at tomorrow's closing bell.